EURUSD price started the week with a bullish momentum but failed to hold the momentum above the 1.0900 mark. However, the fundamental weakness of the euro failed to grab sufficient buyers' attention, setting the weekly close sideways below last week's low. In the EURUSD price, the 61.8% Fibonacci retracement of the 1.12 high to 1.04 low acts as an immediate support to bulls. Moreover, the immediate resistance level of 1.09 signals a significant opportunity for sellers, paving the way for a further downward movement. Examining the weekly chart of EURUSD, technical indicators have shifted from a bullish stance to a neutral to bearish position. Simultaneously, the pair remains positioned above its 20 and 100 simple moving averages, SMAs, with a slight downward slope. According to the daily chart, a potential downward continuation for the EURUSD pair is potent. Technical indicators are firmly pointing south, although they operate within positive levels. The dynamic 20 SMA indicates a lower bullish strength while maintaining a position above the longer SMAs. Based on the weekly forecast for EURUSD, the primary resistance lies at 1.09. A breach above it could expose the recent multi-month high at 1.10. After surpassing this level, EURUSD may extend its upward momentum towards the 1.10 price zone. On the bearish side, if the pair remains below 1.08, the price may lower to the 1.07 level.